Welcome. I am your Polkadot Specialist Varch, and today we're going to be doing another video on InvArch and the Varch token. So if you like this video, please like and subscribe. Now in this particular video, I'm going to be picking up on the tokenomics of InvArch. We're going to be answering a couple of questions, but I've already covered a lot of the features and the benefits of this particular project and its blockchain. So I'm going to go ahead and post that now if you want to check that out so you can see what InvArch is. So we're going to be answering some questions today on different ways on how you'll be able to get the airdrop. We'll be asking questions, are the tokenomics any good at all? What other blockchains will InvArch be coming to? So let's go ahead and get right into it. And again, thank you for joining me today. So just to kind of just do a real quick recap, InvArch is a platform, a technology that is a suite of different tools for decentralized autonomous organizations, DAOs. And again, I'll link a video discussing this and going over this that I've already done. So let's go ahead and get into it. Now, one thing I was thinking about when I was thinking about coins coming out with tokenomics is sometimes you ever seen a situation where a person gets catfished. So you're sitting there and you're like, you're thinking that something's all special and beautiful. And then when you finally get behind the scenes and see exactly what's going on, you get catfished. And that person just is nothing like you thought. So I was curious. I'm not saying that InvArch is like this, but I was curious because the white paper and the tokenomics weren't published. And I was hoping and praying that, hey, I hope the tokenomics is good because it seems like a very promising project. So we're going to dive into the project now to see if this is a catfish or the real deal. So we'll start off with, how do you receive the airdrop? So this is kind of a unique airdrop. So let's get into the different ways that you can receive it. So pretty much within the Polkadot ecosystem, you have to do things with decentralized finance to be able to qualify for our airdrop. So let's go down the line. You can stake 25 DOT or more on Bifrost, Stellar Swap, Acala, Euphrates, and Composable. If you stake on all 5 platforms, that will qualify you. Another way to qualify is using 100 plus dot VDOT on HydraDX Yield DCA. You can also use 25 dot or qualifying VDOT on a relay on Interlay via the lending or collateral. So if you use Interlay and use that amount of DOT, 25 DOT or more, that will qualify you. You can also holding a placed prediction worth of 25 plus DOT on Zeitgeist. You can also provide 25 or more DOT or VDOT as single-sided liquidity pool on so LP, so liquidity pool on HydraDX. And you can also provide 25 or more DOT worth of VDOT as single-sided liquidity pool on Bifrost. So you can pretty much stake on Bifrost. You can pretty much provide liquidity and pretty much stake on Hydra. And those are some of the easiest ways to do it. Now, what's also unique about this particular airdrop is if you do more than one of these, each one of these is actually a pool of funds. And if you do one of each or more, you get more and more ability to get more airdrop. So there's a total of 10 points. They're doing like a point system. So the more activity you have throughout all of Polkadot, DeFi, ecosystems, the more rewards you can get. So I thought that was pretty unique. So those are some different ways that you can qualify and some different bonuses that you might be able to attain by doing different ways of getting involved with the ecosystem. So now let's get into the tokenomics. Let's find out if we're being catfished or not. Okay. So we have, so this is going to be the InvArch token economic economy. All right, so I highlighted just a few points so it doesn't go too long on the white paper that they had, brought out on the tokenomics. So let's get started. It says the Varch token is a native token for the InvArch network used to power the omni-chain economy of organization and services. Varch has a genesis supply of 1 billion tokens. Now, 1 billion tokens is not actually bad overall. I remember when Polkadot originally launched, it had a much smaller supply than, I think they got like 1.3, 1.4 billion now. But when it first launched, it had much, much less. And what happened was the price per coin looked too high. So when regular retail investors or people that aren't normally in crypto, they see the price of the coin and they're like, oh, this one's $20. I can only get 1 or 2 of these, but this one is only like 5 cents. They would start going for the cheaper ones. So by having a little higher supply, it allows people to, from a marketing standpoint of the actual coin, or enticing people to actually buy the coin. People that are in crypto, we know that you can buy a fraction of a coin. That's why even with Bitcoin, it might say it's $65,000 or $70,000, but you can buy $5. You can buy $10. But some of the regular people that are just getting into crypto, the ones that are new, they might not know this. So it's actually good to actually have a certain amount of supply to keep the price of per coin lower for retail investors. So I will mark that as a positive. Now, with the 1 billion, it says the Varch supply is subject to a 10% annual inflation rate designed to seed new organizations and services on the network at the discretion of the InvArch network stakeholders. So the stakeholders are going to be able to pretty much vote and decide on the inflation. I will say this, that is a pretty high inflation. Polkadot had a similar inflation model, and they're already discussing on whether or not they should change that, because when it comes to big money investors, when the supply is continuously having more and more tokens, it's bringing down the value of the tokens because you get more and more supply. So it is something to kind of look into further and to see the direction of that, Now, in terms of the inflation, 60% of the Varch inflation is administered to the decentralized autonomous organization, so the DAOs, on a pro rata based on their support via the InvArch DAO staking protocol. A minimum of 250,000 Varch in staking support is required before a DAO begins generating any rewards for itself. So this is good. So what they're doing, essentially, they're making sure that DAOs organizations that are using this particular platform to manage their organization, that they're staking a good amount. So that's one way to try to bring coin supply down by forcing them to keep them on the platform. So if you have a lot of different organizations using this platform, that is one way to kind of get coins to not be all over the place, dumping the price. So that's a good thing. So that is another good check mark. The remaining 40% of the Varch produced from inflation is administered as staking rewards via the InvArch DAO staking protocol. The same reward rate is given to Varch stakers regardless of the DAOs they stake toward, allowing them to focus on staking towards what they support. So essentially what they're doing is they're using the portion, so 60% to pay DAOs, for participating. And the other 40%, they're using it as, another way to pay for regular stakeholders, just regular people, utilizing it. So this is just trying to incentivize people to actually use their particular software, their particular one. So when they say protocols, that just means the application. Okay, so let's not make that too difficult. So when they say protocols, they just mean the application. When they say staking, what does that mean? It just means that this is a way that you can get interest on your particular coin that you're utilizing. All right. So that's good that they're using the inflation to incentivize people. Now, inflation models are a lot of the proof of stake, which is a way of paying interest on your particular coin. And that is with the proof of stake or the proof of where they have the inflation models where they're producing coins to give. This is actually important for some particular models because of participation. If there was no reward, then the coin might not get utilized. They might just keep it offline in like a USB drive type, called hardware wallet. So this is to try to get people to be active in the community and active in the ecosystem, so that you have more of the coin being utilized across the platform. So let's keep going. So this is a breakdown of the allocation of the actual coin, the distribution of the coin. So starting, it's 10%, so 10.25% is going to go to the network treasury. 18% is going to go to the InvArch Foundation, 7% to early backers, 5% to the crowd loan, 25% to the ecosystem growth, 11% to strategic backers, 6% liquidity provisions, 9%, well, 9.75%, almost 10% to infrastructure. Then we have 8% to the DAO ecosystem fund. So that is how the coin is going to be distributed. So essentially, network allocation is going to be 34%. Okay, so the Varch is pretty much to use for the network, so that's like, getting everything started, providing liquidity to exchanges, things like that. You have to have a certain amount of funds to get to exchanges so that there can be trading of your coin, things of that nature. All right. Then another 25% is going to go to the ecosystem growth. So pretty much these are the same numbers here, but they're just putting them into 3 different categories. So these are the same as what we just read. but now they're just putting them in overall broader categories. Okay, so where were we? So we have ecosystem growth at 25%. Okay, now the one thing with the ecosystem growth that I noticed is this has a vesting schedule. So that means they don't just give the coins right away. It's going to be done over a period of time. So in some cases, it'll be 1 year, some cases it'll be 2 years, you know, those are some different things to look into as well. But yeah, that's this. I'm not going to get into this here. I will post a link to the particular information, the median, where you can also, you know, dive a little further into it. But just keep in mind that some of the investors and some of the people getting drops and things of that nature, it's going to be given over a period of time before they can have access to the coin. So it doesn't just have a whole bunch of coins that people just sell right away and it drops the price of the token. All right, so towards the end here, we have the Polkadot ecosystem airdrop, and it's 5%. So that is what we talked about earlier on how you qualify for. So this is, I tried to get some explanation just to double check, but it does look like that the drop that we're going to have after they do the snapshot to see who qualifies, it does look like it says vesting schedule, 2-year linear distribution of 50 million Varch will be airdropped to DOT stakers across Polkadot. Okay, so this particular airdrop is going to be about 40 out of the 50 million coins, but it does show a 2-year linear distribution. So that means over time they're going to be, looks like they're going to be giving it to us periodically over time. So I don't know what that's going to look like. I don't know, is that monthly, quarterly? I don't know how much we'll get up front, but that is something I tried to get a little more information on, but I didn't hear back right away before I wanted to kind of start this video and get it out the way, you know, so that people will have some information on what to expect. But this is something to look into as well, that the vesting schedule for this particular airdrop that we're trying to qualify for might be 2 years on when we can receive the coin over time. Now, that doesn't mean you have to wait a whole 2 years to get it, but that does mean that there could be like a certain amount that you're given over that period. Then we have this one I thought was very, very unique here, which was the external ecosystem airdrop of 5%. So what is this? This has a vesting schedule only 1 year. So, and they get the up to 50 million Varch, and this will be airdropped over 3 other ecosystems. So that is big. So that means it's going to be coming to Cosmos. It's going to be coming to Solana. And it's be coming to Ethereum. They're already on Polkadot, and they're already on Kasama. So that is 5 major ecosystems. So this is what I thought was where it really painted a good picture for this particular project on how broad and how many organizations it's going to be able to support, because each ecosystem has a lot of different projects that are trying to be decentralized. And there's already going to be quite a few projects in Polkadot, but now they're going to be going to some of the bigger ones, such as Cosmos, Solana, and Ethereum's the biggest. And so because of that, this app, this suite of being able to manage these decentralized organizations is going to be available to many, many projects on the blockchain. So I do think this is positive news. And the last little bit was a funding allocation, was a 36% here. So at the end here, it says the Varch distribution overview. The initial 1 billion Varch supply will be fully unlocked over the duration of a 5-year schedule featuring a combination of 1 year, 2 year, 3-year, and 5-year vesting schedules. Okay, so this here's a kind of like a graph that shows, how the coin's going to be distributed over time. Now let's get into a little bit of the utility. So how are they going to be using all these coins that are being airdropped over time, and what's the use case? I mean, what is this coin used for? All right, so it says account operations. So this is what the coin is used for. So account operations, the Varch is used to create and deploy both multi-sig DAO accounts on the InvArch network. Account management and governance operations require Varch to cover transactions fees. Varch can also be used as a universal payment asset for transacting on external networks using the omni-chain accounts. So what does that mean? So essentially, the coin can be used to pay fees, to do different things, but not just on the InvArch network. It's going to be able, if the organization wants to use Ethereum or Cosmos, it can use this particular coin to be able to do transactions across different ecosystems within its technology. So that's essentially what it's saying. It's saying that this coin is going to be used to pay for the organization to be able to sign things, sign off on things. Remember, the multi-sig account just means that multiple people have to agree before actions can be taken place. And all these different things are paid in the native coin, in the Varch token. Another use case, the DAO funding, staking in farms. Varch is used in DAO staking and DAO farming by locking Varch. So essentially, you use a coin and get staking rewards. So that's essentially that. Some other different things that they have here is for the smart contracts. Varch is used to pay for the deployment and the cost involving smart contracts. So that is another use case for this. It'd be used to pretty much pay for the smart contracts. So essentially, the way InvArch works is they don't actually have to have the smart contracts for themselves. They can use smart contracts that are on other blockchains, other technologies, and they just allow access through their particular blockchain for these other projects to bring in their technology. So even like Web 2 or the old internet, when it comes to like Telegram and Discord and stuff like that, you can use those external technologies on the Varch platform. And by doing so, you would pay a cost for doing that in this particular token. Gas subscriptions. Varch can be used to pay for monthly and annual subscription packages, provides gasless transactions to multi-sig and DAOs and their members. So pretty much you can have gasless voting and gasless things that for your organization just by paying a subscription, but you have to pay in the native coin. So this is good. This is all great use cases because you have to be able to have utility for the coin so that people will have a reason to have it in the first place. And then for network governance, Varch is used as a deposit for submitting proposals to the network governance system. So pretty much it's going to be a governance token as well. So that is the different use cases. I do want to see if there's going to be a burn. So my overall thoughts of the coin, I do kind of like it. I do like it. The things I like is the utility. that they do have staking rewards. I love staking rewards where you can feel like that you got your money going to work for you. We're getting more and more coins, and also incentivize people to actually use the platform. I do like that there's different things that that you could pay using the coin. It showed a lot of different utility that they have. One flag that I would say is you do have the 1 billion supply, which is fine, but with the 10% interest, there should be some type of burn in the future. And I did read in there that they are going to be considering this in the future, but to kind of get everything started in the beginning, they wanted to have this particular model at the moment, and they might possibly change it. But that is something that that does take away from the coin if you constantly get more and more supply. So hopefully some of these different functions where they're paying fees, that there's some type of burn, when they're doing these different things, like even when it came to staking on the DAO, that quarter million, that 250,000, instead of that just being staked, maybe that could be a burn for the DAO, or there should be some type of burning mechanism at some point to help with the coin losing value with the inflation constantly each year. 10% is quite a bit. So, but I would say my overall verdict would be it's not a catfish. I do believe that it is pretty. The coin's going to be pretty. I think the biggest thing overall that I liked was the fact that I saw those other ecosystems. So it's not, Polkadot's already big, gigantic ecosystem. But the fact that they're going to be not just in Polkadot, they're going to be on Ethereum, they're going to be on Cosmos, and they're going to be on Solana. Those are some of the biggest ecosystems when it comes to a lot of different applications and teams and projects and products being launched. So I would say that I am liking what I'm seeing. I am your Polkadot Specialist Var. Like and subscribe. I would greatly appreciate it. Have a blessed day.